Everything we do in life, the more we do it, the better we get. Practice makes perfect, right? When we're learning a new strategy, it's probably going to take a little bit of time to get really good at it. We're probably going to make some mistakes along the way, and that's okay. What's not okay is if we don't learn from those mistakes. We need to learn from our mistakes so that we can improve over time. Pretty soon, we'll be killing it at whatever task we're working on. I'm working on coming up with a set of 0 DTE SPX rules so that I can make easy profits every single week. Well, I didn't hit my goal last week, and the main reason, I didn't follow the set of rules I set out for myself. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can do me a favor, I'd really appreciate if you hit the like and subscribe button so we can get this video out to more people. It really helps out the channel and I appreciate it. So thank you very much. I think it's super important that we understand all the strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit for ourselves in any market safely. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a link to a paid course and option coaching one-on-one if you're interested, both very reasonably priced. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys. Let's take a look at what I do with the 0 DTE SPX option trading rules. First of all, I want to buy calls in an uptrending market, and I buy puts in a downtrending market. Those are my two main rules, and I always utilize stop losses, almost always. You're gonna see where I made a mistake on that, but going forward, that's the plan. I want to move up the stop losses as we profit and make money. I always want to be aware of the channels and support levels as well as resistance levels and different chart patterns. So when trading 0 DTE, the technicals is really what I go on. Okay, let's take a look at some of the technical indicators that I utilize. Now, this is the Moomoo platform. I love their charts. I'm actually talking with them right now about getting a link that you'll be able to join and get some free stocks. So hang in there for that. But I love the charting on this, and it's a great platform. So we'll talk about the technicals that I use. The first one is the Bollinger Bands, and those are in the white there. And let's see, when we go to the Bollinger Bands, let's take a look here. So the Bollinger Bands, indicator settings. So there's a mid, an upper band, and a lower band. And it's a technical indicator used to determine the normal range for a stock's price movements when it's up or below the trading range. And basically, the way that it works, when it crosses below the lower band, it may be oversold. So down here in the lower band, it's oversold. And in the upper band, it is basically overbought. So if I'm trading short, buying puts, I'd like to see something moving from the upper band to the lower band, overbought and then moving down. If I'm going long, I want to start down lower and move higher. So that's the Bollinger Band. It is very similar to the RSI, which is down here. And you can see this is oversold right now, and this is the SPX. So I've got the Bollinger, the EMA, and you can see down here the RSI. And if we click on the RSI, we've got different time periods, 6-day, 12-day, and 24-day moving average. But this is the relative strength index. and it's very similar, and it determines the speed and magnitude of a security's recent price change. So an entry signal, if the RSI is above 50, indicates a strong market. Below 15 or lower is oversold, so similar to the Bollinger Band. And an exit signal, RSI below 50 indicates weak market. RSI of 85 or higher is overbought. And then it talks about different consolidation and reversal signals as well. The other key technical indicators that I utilize are the EMAs, the exponential moving averages. And if you look here, I've got the green is the 5-day. So this one takes the 5-day moving average, so it's moving faster. It'll give you an idea where the price is moving soonest. And then we've got the 13-day, the 50-day, and then the 200-day moving average, which is a solid level of support. A lot of the traders that day trade utilize the 13 and the 50, and that's what I utilize as well. So when the 13 crosses the 50 to the upside, then I like to be in calls. When the 13 crosses down over the 50, so the yellow over the red, then I like to be in puts. Now, let's go to the let's take a look at this chart. This was last Friday, and all the different trades I made throughout the day in the SPX. So I'll just walk through. This is actually the trading view chart. I'm using this because I'm more familiar with it and I can make my notes. However, the Moomoo chart is great I was using this when I was making the trades. And I'm making the trades right now on the Tastytrade trade platform. But I will be doing that on Moomoo as well. So if we are, so we opened up on Friday. This is Friday the 23rd. So last Friday, we opened up, we gapped way up. You can see, okay, so on this chart with TradingView, I only have the 13-day and the 13 and the 50 moving averages. Yeah, so we started here. So we were in an uptrend. I right away violated my rule. I should be in calls at this stage, but I bought a put. So let's see if we go back on the SPX on the 23rd. The first trade that I made was right here. I bought the put, the 5100 put, and I sold it. So I bought it at 657 and sold it at 659, lost $100. So let's go to the chart. Now when I buy, I put a green vertical line. So you can see this is where I bought. I thought it was ticking down. I thought it was going to move back down. I saw this edge moving. So even though we were above the 50, I didn't wait. And I went ahead and bought this put. And then I sold it at the red. So anytime I buy is the green line. And then I sell it at the red. So you can see it was just, you can see the timing. 657 down here. And then I sold it at 659. If you look here on the 657, 659, lost $100. And that again is because I was in a put and it moved up. So I lost $100. Now, I was trying to learn from my mistake, and I said, hey, you know what? You need to be in the calls. So I bought a call immediately, because we were coming back down, and I thought maybe it's going to shoot up. And then I sold it right away. I actually got stopped out. I moved up my stop price and got stopped out. So I'll just get on the different platforms. My picture is getting in the way. But so I bought for $8.30. I sold at $8.80. Now I made $50 on that trade. So 50 profit. Now I'm down only $50 because I lost 100 here and I made 50. So I am down 50 overall. I write in green when I profit on a trade, red when I don't profit. And then black is just some notes that I made. So there we are. Now look, the green, the 13-day crossed below the 50. So I should have been in puts, right? No, I bought a call and I didn't put a stop on. I should have had a $150 to $200 stop on and I would have saved money. I thought we were touching it and maybe we're going to move up, but nope. Dropped all the way down, no stop. I sold finally right here at 744 and I lost $350. So now I'm down $400. So let's look at that. 744. Here's the 350 I lost. 7:44 a.m. Put on at 7:25. So not a very good start in the hole from the start. One thing that I'm going to do next week is I'm probably not going to trade right at the open like this. I've watched a lot of others and they normally wait to see really how the market's moving first before trading. I'll see. Next week, I'm going to follow my rules and we'll see if it turns out better. But I lost 350, should have put on a stop. My biggest problem there was I didn't put on the stop. So want to put on the stop. Coming down. Now, we were really trending down. So I got in late. I did the right thing here. I bought put, and this is at what time? 8:03. And look, I got stopped out because I moved it up. My stop limit at 8:04. So right here, 8:03 to 8:04, 1 minute made $440. That put me back to close to even. So 440 profit, up 40 for the day. I moved my stop up so quick because, hey, I'm back to even. I just wanted to get back to even so I could profit more the rest of the day. But notice, if I would have followed my rules, I would have had a stop on here and would have lost only $150 to $200. And if I had the right strategies here, according to my rules, I would have done better as well. And but hey, I'm learning and kind of experimenting with this. But the discipline, I think, will help me next week. So got down here at the bottom. Now, a big retracement like this is a Fibonacci diagram chart. When there is a big drop like this, it's just a law of nature. When there's a big move like that, once you can see it's trending down, lower lows, lower highs, all the way down. Once it breaks that pattern and we don't get lower lows and lower highs, then it started moving up. This is where you want to start that Fibonacci chart and you put it up to the peak, and then there is typically a 50%, actually right here is the 50% right in the middle up to the top. So a 50 to 61.8% retracement. So at this point, once we broke that, I could have, even though I'm below the line, it's trending up and it broke the pattern. So I should have placed calls maybe at this fib retracement. The RSI was moving up as well at this time. So let's see. I got in a little bit late on the puts. I could have made more if I got in earlier on those. Up 40 for the day. Here was the next trade I made. I did a put. I should have probably, I was below the line, so I followed my rule there. And I profited $140 because I bought a put here. I caught that little down move in a short time from 8:30 to 8:32. Right here, 8:30 to 8:32, $140 profit. So you can see here in the last 30 days, even though I'm learning and making mistakes, I'm still up $1,165 on SPX. So um, I'm getting better, but you know, I expect to. I want to make that per day. um, let's see where we're at now. So we go back to the chart. So we broke the trend. Here we're breaking, the 13's breaking above the 50. And, you know, so I would like to be in calls at that point. I actually bought a call here at 8.59 and sold at 9.03, $80 profit. So 140 profit here. I was up 180 for the day. Here another 80. I was up 260 for the day. Now I'm kind of following my rules, getting better. Moving along, we broke back down below the 50, the 13. Here, we were up above. I thought we were at a support line here. I was above. I didn't follow my rules. I got lucky. I still made $20 profit, up 280 for the day. We were getting ready to cross here and trending down. So I did 2 put trades and lost on $10 on one, made 90. Okay, here those are. $10 made 90. That 90 was at, I closed it at 10.53. Right here, yep, 10.53. If you look down here at the bottom, 10.53 is when I closed that. So now I'm up 360 for the day. We're bearish. Did I do a put or a call? A call. I don't know. I got lucky, but I did catch a little up move and $100 profit. So I was up 460 for the day. I put here lucky, bearish, and should have played put. And put would have been the right move if I didn't get stopped out because it did keep moving down. And then I ended up, my last trade was a call. I saw it trending up. And I lost $85 on my last trade right here. But overall for the day, I was up $375. So with all these mistakes and this trading, I still made $375 for the day. So not too bad, but a lot of room for improvement. And I'm going to continue to do some videos. Next week, I'll be trading zero DTE SPX, you know, as many days as I can. And I'll document as well like this so we can see where we stand and how we do. And going back, I wanted to show you one thing on this Fibonacci chart. So basically, the way that this works, once you have that big drop, this is right here is where, if you look at this gold zone, that's where you should be entering the trade or the retracement up. And then enter in this zone, sell at this first level, this 0.5. If you've got multiple, again, SPX, I'm only trading one contract, but if you're doing SPY or something a little bit smaller, you can have multiple contracts on. You could sell one here, you could sell one here at this level, and then it even got and retraced all the way back to this zone here. So you can sell it, you can get in at this level, the bottom preferred, sell a little bit in this zone, sell a little bit here, and then even hold on if you want to write it up a little bit more. But at least these two levels you can sell and should be able to make some good profit. And this is something that kind of happens in nature. So learning more about this, let's see if I can show how to get that done. I delete that. And then I go to, oh, here it is, right here, fib. So fib retracement. And then can't remember if you start at the top or the bottom, but at the bottom. And then we go, nope, you start at the top. Never mind. Delete that. Go here. Wow, we started trending down all the way from here, but I'm gonna start right here. And then you go down to the bottom, and then you can see this zone here where you start to break out and then up. But all charts have this fib retracement. It's something that occurs, and I'm going to get more familiar with that and keep testing it out. But these are basically the trading rules that I utilize. Please leave a comment. Let me know your thoughts and if you're trading 0 DTE SPX options. All right, guys, if you're a beginner and this sounded a little confusing, don't worry. It did for me as well at first. We'll continue to learn together in future videos. Be sure and download the free options workshop in the link below. Remember to hit like and subscribe. Also, check out the link for the paid options course as well as one-on-one coaching, very reasonably priced. And there's a link to the Tasty Trade option trading platform. Thanks for watching. I'll see you in the next video.